So, Nancy, what is the vibe right now among investors in public tech companies? I mean, we've seen a lot happen in the way of earnings. We've seen a lot of movement. What's your mood right now?
Yeah, well, I mean, it's never easy. This reminds me a lot of the deep seek sell off, and then it was exacerbated by tariffs. And so we just did a quick analysis and went and looked at all of our tech names from deep seek to Liberation Day and then after. And 201, except for ServiceNow, every single one of the names that we own sold off dramatically during that initial period. And then we're up somewhere between 30 to over 100% between Liberation Day and the end of the year. So, if you believe that this is a transformative technology, AI that is, and that there are other transformative technologies right behind it, robotics, quantum, space, and then we count nuclear as kind of a transformative event, then you want to use the weakness to add to names, which we did last Thursday.
Which names did you add?
We added to Apple as the sort of treasury bill allocation within technology, so defensive, kind of plods along. We added to Microsoft and we added to Palantir in the tech space, and then we added to GE Vernova and Eaton, and then some consumer discretionary names like TJX and Ulta.
Now, you talked about ServiceNow. I wonder in the arena of enterprise software companies, because those are the ones that we've been talking a lot about on this show, and we've gone through some of the data here. I think the median multiple now for the enterprise software companies right now on a forward revenue basis, something like 3 to 4 times right now. Um, do you think it's oversold? Which names do you think are oversold?
Yeah, well, I think you look at the percentage of the tech names or the Mag 7, however you want to calculate it, as a percentage of the S&P, it's gone down pretty dramatically, but the earnings growth and the earnings contribution has gone up. So if investors think that this market is going to go up without technology, that's just wrong-headed. So we do own the hardware names, and we like a number of those names as well. So think, Nvidia, think AMD, Broadcom. Those have been names that we've owned and continue to like. I think Cisco presents an interesting opportunity here because it was a beat, and a raise in guidance. It was just a small decline in margins, and it was due to memory prices. So margins, I think, declined to 67.5%. I think this is the algos driving the trading narrative and then the hedge funds jumping in. And so when we get in these periods like we did during DeepSeek, you wait and then you step in and add to names, which we were doing. Palantir at 88 in the DeepSeek period. We added to Teradyne back then, which was down over 25%. We added to Palantir. I'm sorry, NVIDIA at 108, Palantir at 88, and Tesla at 240. So those are generational opportunities, or at least once in a few years opportunities. And so we will continue to do that because we think that we're in a transformative economy that is going to change the way we live and work.
Help me understand Cisco right now. We haven't talked too much about them on the show. You mentioned the earnings results that the company has posted. Broadly speaking, I mean, talk to me a little bit about what the narrative is around Cisco, where they're excelling, and where there could be challenges for them.
So it's an old tech name. I mean, remember it was the poster child in the 90s of overvaluation. I think it was trading at 100 times. I was managing money then. It was a nutty period because the circular investment was being driven by debt. Now it's being driven mostly by cash, free cash flow and cash on the balance sheet. So what hit Cisco then is unlikely to hurt them now, which is, the bankruptcy of their underlying customers, which was then. We don't think that's going to happen now. I mean, just as an aside, Google has 126, $130 billion in cash on their balance sheet, which is more than most countries. Microsoft has 89 billion in cash. And so we think that the market's overreaction to the CapEx spend is an opportunity for us, and Cisco is one of those. They are benefiting from on the networking side of the AI build out, and they purchased Splunk a number of years ago, which is a software company. They have integrated it very effectively, and we think we think you just, I mean, it's a 10 to 12% earner. We think you own it. It's not our largest holding, but it's a holding in our value portfolio.
Hmm. You talked a little bit about some of those companies that are working on further out technologies. You talked about space. You mentioned energy, nuclear, also in that equation. Of course, that's a little bit closer. Depends how you frame some of these technologies, which bets that they're working on. But
Right.
I wonder how you think about valuations for these types of companies. For a lot of these companies, and I think maybe space is a bit of a better analogy here. Although you look at fusion too, and you could also make the bet there
Mhm.
that that's also a moonshot technology. How do you think about valuation here for companies that don't have a lot of revenue, and then there's a lot of R&D, and you could say the same thing for quantum too.
Yeah, you could. Yeah, so our portfolio, we have a thematic portfolio that invests in these themes, and what we've done is we've taken the leaders and we've made them at least 50% of the portfolio. So in quantum, the leader would be IBM. Then we have enablers that would be Coherent and Honeywell, and then we have the speculative names IonQ, Rigetti, and so forth. So that's how we're putting the portfolio together. It's knocked it out of the park since we launched this strategy on September 30th of last year. So we think that that's how you do this because you want to mitigate the speculative risk, but you want to participate.
Right.
And then in addition, you want to have stability in the underlying portfolio. So I think I I mean, some of our, investing is about being mostly right, Akash, and it's painful. So you kind of live in, as a PM, you live in this sort of perpetual state of dissatisfaction. It goes up, I should have bought more. It goes down, I shouldn't have bought it. But effectively, what we're trying to do in our portfolios is be mostly right.
I'm
And
I-
if
I'm
we,
with you. Nancy, the question I'm trying to sort of get your perspective on here is whatever the valuation ends up being for a fusion company, for a quantum company, for a space
okay,
company. There are there's a lot of fundamentals that you could look at, but ultimately, if the company doesn't have a product yet, or the product is still 10 years away, I mean, it's a lot of narrative-based investing, and so I guess my question is less about the portfolio allocation, and it's more about you as an investor looking at whether it's $100 million company, $100 billion company. How do you even land on a number?
yeah, no, I get it. So valuation in this kind of a transformative period, even though I'm a value investor by training and we run a value strategy, in this particular space, what you have to do is you do have to buy the narrative and make sure that you have quality management teams. So for many years, I didn't get Amazon. They had no earnings. How could you buy a company that has no earnings? But since the IPO, Amazon's up 250,000%. So the question you have to ask yourself was, when was it overvalued? When was it too late to get in? And so if you believe in the transformative technology, valuation becomes less important in the near term, and it becomes much more important in the long term. So Tesla would be another example where we were kind of mortified when went on the Joe Rogan show and was smoking pot on the air and sleeping on the factory floor and firing the C-suite and had a non-independent board. And so we took a double and sold it, and then it went up fivefold.
Right.
So with these kinds of names, you have to, I think, believe in the underlying fundamentals, X the earnings slash valuation.
And the management team too. I mean, I think
100%.
the dots that are connecting in my head is we have a lot of early stage seed investors on the show, and there, I mean, it matters almost exclusively who the founders are of the company. And I guess what I hear you saying is it's not so different, just that the company is public. There's a little more money in the mix. There's
Right.
obviously technology, but you have to believe in the people running the company. Nancy, I want to thank you for coming on.
Yeah.
It's a great perspective as always. That is Nancy Tengler, CEO and CIO of Laffer Tengler Investments here on TITV.